Good morning. It is May the 20th, 2016. Time to kick off Friday's trading, end of the week. That tends to bring profit taking if the market has moved directionally for a week. It is also option expiration for treasuries. Very little news overnight. Very little news on tap for us this morning. So down to option expiration, which is what I think will drive today's trading in treasuries. And today the 10-year favors at close between 29 and 30. That was the play the last couple of days. So a close at 29.16 is the mathematical close today, and we'll see if that happens. It tends to do that if there's not any news, or if we don't get a lot of help from the stock market. We've got resistance at 24. We've got support at 12. What's right in the middle? 29.16. So that's where we find ourselves today. First sell 23.27, sell 1. 31 to 03, sell 2. On the buy side, 9 to 13. Put a question mark at 16. We'll just see what happens. And then 1 to 5 for buy number 2. The news today, existing home sales, 5.4 million. And Baker Hughes rig count, last week, North American rigs, 449. There was some 1,800 drilling about a year ago. You talk about depression. You're talking about extinction for a lot of them. And any company that used leverage is finding out the bad side of leverage in the oil patch right now. And that's one of the issues that we really face in futures is the leverage. Leverage is great when you're right. Everything works out. It'll kill you if you're wrong. And that's why you have to protect yourself. You cannot go into a trade without thinking through your exit prior to putting the trade on. You got to maintain your capital to trade the other day, and we probably are more cognizant or attuned to the real meaning of risk and the implications and the hazards of dealing and trading with risk daily than the average bear is. Okay, right now looking at the 30-year, the buck to 04 would be 1, 7 to 11 sell 1, 15 to 19 sell 2. The mathematical close today is 63 to 64 and a half. That would put us at close at 63.24. Be the mathematical close today. On the buy side, 20 to 24 is buy 1 or support 1. So 13 to 17 buy 1, and leaning against that low, 1 to 5 buy 2. Hard to see the E-mini exploding and rallying with a lot of strength today, but stranger things have happened. Asia and Europe shook off our selling yesterday. Didn't pay any attention to it. And the talk and chatter today is maybe the Fed won't raise interest rates come June. Maybe the real interest rate is they're going to set us up, look at the data one more time, then raise interest rates in September. Buy stocks. Again, we're in a pretty enviable position because we don't have to know who, we don't have to know why. We can just see that they are entering the market from the long or short side. We can track the volume flow, the volume movement, and get on the right side of the market that way. Okay, gold is pretty quiet. We've got this break up here at 1264, 1268, so 1265 give or take. We got the high volume number at 67. Got to get through 60 to get there. So first sell is 60 to 62. Second sell 65, 67. More comfortable getting short here because of it's a high volume area. On the buy side, 53, 55. Then our last rotate down stopped at 48, so 45, 48 by 2. Structure, market activity favors a sell. The fundamentals have changed this week if the Fed raises interest rates. So, and the market's acting like they will come June. The euro is under pressure because the United States might raise interest rates in June. The probability went from about 4% to 32% after the FOMC minutes. It'll settle down. But the talk from the Fed has been 2 interest rate increases this year, not 4. So 1 in June, 1 in December, 1 in September, 1 in December. That's where the play is right now, and the market's split. About half think September, December. About half think June, December. All data driven. Okay, we have this spill from 65. Last rotate up was 43, so 40 to 50. Sell 1. 65, 75, sell 2. On the buy side, 112 even, 112.10. Buy 2, 111.75. Okay, I still think crude's headed 50. Why? Because it's close. Today is contract expiration. We've been trading the July contract since Wednesday. We rolled 2 days before, so 49.50 is where resistance is right now. We came in last night with the first sell at basically against 49, and the second sell was 25 to 50, and we just touched 25. So 49, 49 and a quarter, sell 1. 49.50, 49.75, sell 2. On the buy side, 48, 48 and a quarter, buy 1. Buy 2, 47 and a quarter, 47.50. The tendency for the last 2 expirations has been for the market to rally on expiration day and for 2 to 3 days thereafter. See if that holds true today. Okay, to everybody's favorite contract, the E-mini. And we spending more time probably with the E-mini. We should probably be spending more time with crude and the bond. But this is the toughest market to trade, and it's where you can really get down and learn how to read the tape. The other markets pretty much dependent upon market moves and it pauses, moves and pauses. And the E-mini's got enough action back and forth all over to allow you to gain those skills, learn how to read the tape. We got volume at 49. We've got this K period high at 54, 53.75. So 50 to 55 is where best resistance is. There are stops above 47. So we're going to put a question mark at 47.50. But 49 to 53 3, sell 1, then 59.64, sell 2. On the buy side, I'm going to start off 35.37. Let him test the overnight session high, but we're going to put a question mark at 40. Then 30 to 32 for buy 2. Don't think we're going to take out today's lows. Existing home sales 5.4 million. Baker Hughes rig count. Two pieces of news today: option expiration and treasuries. Is the news that we'll face option expiration dynamics. Okay, it's going to take a bit to get everything up and posted. Like I said, I had confuser problems this morning and took a while to get most things open. I will be with you as soon as possible.